Parks Capital, where education plus investing equals success.
Hi everyone, I am your portfolio manager, Rajiv Dixit. The topic of cryptocurrency is one that we believe everyone knows about, but not many understand it well enough. In our zest to learn more about this fascinating concept and to give you a deeper understanding of cryptocurrencies, we have traveled today to Pittsburgh, Pennsylvania, to meet with Linda Duessel at the Federated Hermes headquarters. As a senior equity strategist, Linda is a part of a team responsible for formulating Federated Hermes' views about various equity market conditions and the firm's positioning strategies. She is also responsible for articulating the strategies, the process, positioning, and performance of Federated Hermes equity portfolios. Linda has more than 35 years of investment experience and discusses personal finance with investors across the country on topics of interest ranging from impact of alternative minimum tax, investing for retirement, and of course, cryptocurrencies. If she looks familiar, that is because Linda is often seen on CNBC, Fox Business, and other media outlets discussing various financial topics. Thank you so much, Linda, for taking the time today to sit down with us. In this video, we aim to accomplish three things: identify the concepts surrounding cryptocurrency, blockchain, and Bitcoin, talk about the risks involved in the nuances of this new technology, and finally, take all of this information and evaluate Bitcoin from the point of view of a long-term investor. Now, to start out, let's talk about some concepts. People in our line of work talk finance and Bitcoin all day long. Will you simplify what Bitcoin is and provide us with a background on how Bitcoin was created?
Yeah, sure. And truly, it is of great interest to a lot of people, has been for some time now. So I dove deep in to learn all about it. And it all started way back in 2008. It was actually Halloween Eve, 2008, reminding me to say at the outset, that makes Bitcoin still a baby. It's still early on in its lifespan. So we talk about volatility. I mean, that's something that is part of just growing up in a new industry.
Sure.
But the original founder, if it's a person, we don't know if it's a group, Satoshi Nakamoto, put out a white paper and said, I would like to create a new payment system, peer-to-peer, so there'll be no middleman. If I have something that you want, you can buy it directly from me. We can do it in a quick, efficient way, and it can be anonymous. No central bank, nothing in between, in the way. And one of the reasons he did this, put this together, was to allow for financial inclusion for around the world. About 25% of the world population doesn't have a central bank. There's no banking system. And if you have loved ones in another part of the world, third-tier countries that you want to send money to, the way it's handled these days, they get about 90 cents on the dollar, whatever you sent. So his idea was also to help that advance. And it's the most dominant. It's the oldest. Bitcoin just first started to come about back then, meant to be a payment system.
That's a wonderful point. I didn't know that was the case. That's a great point. That it can reach so many people now as payment systems. Thank you, Linda. A question that comes up regularly is that is there a difference between the concept of Bitcoin and blockchain? I know the simple answer is yes, there is a difference. But could you explain for us the difference between Bitcoin and blockchain?
Yes, the difference is huge. And the idea of Bitcoin to start was, it was kind of a genius of the Satoshi Nakamoto, but also the blockchain on which it rests, on which it relies to be secure and efficient and to work as a currency, is probably even greater of a genius. And when we talk about the volatility that's going on in Bitcoin and other cryptocurrencies this day, the idea of the blockchain, which is a database and a distributed database, is something that will not go away, no matter what happens to the individual cryptocurrencies. What does this mean? A distributed database. It's a ledger. We all know what a ledger is. And a ledger is a book. It records from the very beginning, from the very start, if there was a Bitcoin at the beginning, how it transferred back and forth and here, across its lifespan. And the blockchain records all of the transactions in Bitcoin and other cryptocurrencies in a very secure fashion. It's distributed around the world, and it is of open architecture, which means anyone can see it. When we do a transaction, you and I, using Bitcoin, others are doing it too. It's called a blockchain because a group of transactions will be put into a block once verified. Yes, that was you. Yes, that was me. Yes, this was the service or good that we wanted to transfer for this amount. And once this has been verified by computers around the globe, encrypted, very complex, to say, yes, this was a real transaction, and then verified by thousands of supercomputers around the globe, then and only then is it added to the blockchain. And obviously, as time passes, a new block is added every 10 minutes.
So it's a follow-up question to that is, so basically it's a network for a simple person like me. It's a network of computers all across the world, pretty much actively participating in this database to update it and to verify it. Is that correct?
Yes, that is correct. Supercomputers around the world. If you're the first supercomputer to solve the encrypted mathematical complex equation,
right,
then you win Bitcoin. You earn Bitcoin, and it can be very lucrative to do so.
Right.
That is why there are so many around the world.
Thank you for helping us understand the concepts of cryptocurrency. What I would like to do now is talk to you about the various risks associated with cryptocurrencies as an investment. We all know that governments don't like change. They also don't like to lose control, especially of the money supply. With the advent and adoption of Bitcoin around the world, can you elaborate on the regulatory risk that Bitcoin could face in the future?
Yes, of course, you're right. The central banks in the developed countries around the world will not give up their hard-fought monopoly over fiat currencies, which is why I think it's better for us in the developed world not to think about Bitcoin as much of a payment system as potentially a store of value, a digital gold, potentially. We can discuss whether or not that's legitimate in the future questions, but there indeed are central bank digital currencies that are being developed in various stages of development around the world. So yes, governments don't want to lose control, and the whole DeFi economy, this decentralized finance economy, which is moving ahead. This is just progress. It's progress, and governments with their fiat money do not want to become dinosaurs. Central bank digital currencies are definitely something that is going to happen. And as somebody who, when I first started studying cryptocurrencies, I was very, skeptical of the whole thing. I thought it was a joke. But the thing that really changed my mind beyond the security of the blockchain, which is so important, particularly these days with hacking and the like, is the financial inclusion that can come about, could never come about, that left people in third world countries, they'd be suffering poverty from the beginning of their life and nothing they could do about it. So if we decide Bitcoin is not going to be a currency here, that's fine. But 25% of the global population doesn't have a bank to clear through. And that 25%, 65% have a mobile phone. And they are trading as we speak. I would say this is a year ago number, but Nigeria, 1 out of 6 people in Nigeria, probably late 2020, was dealing in Bitcoin. It's happening as we speak again, not going to go away. As somebody who has decided it's not going anywhere, I'm welcoming regulation. Regulation means that leaders around the globe in these areas have determined it's not going away. This is not the new tulip craze from back in centuries ago.
Talking of governments, there is one thing governments like to do, and that is impose taxes. How do you see the tax framework changing in this country to adapt to the volatility and gains in this new technology?
Yeah, the tax man is a little bit behind the game in the game here, and really wants to get a hold of the ability to tax. Well, when I explain how you can use your Bitcoin wallet to buy things. You can go down to a Starbucks and buy a latte with your Bitcoin, and they'll take your Bitcoin, then they'll immediately turn it back into cash. I wouldn't recommend that you do it, but you can do it. Now, if you bought that latte with Bitcoin that had appreciated from the moment that you bought it, that's a security who has capital gains, and our government wants to get the taxes, and you're meant to report that. So for last year, when we were doing our taxes in 2021 for the year 2020, for the first time ever, there was a question that you had to answer. Did you, at any time during the year 2020, transact, own, sell, buy, sell any cryptocurrency? And you better answer it honestly, because you could get audited. Mm-hmm. Well, this year, some of the bigger exchanges, Coinbase being the biggest one in the United States, Square, PayPal, some of these Robinhood are offering now forms that will help the government to track our transactions out of cryptocurrencies that we may hold through these areas. So the advancements are certainly being made in this way, and it's going to be confusing. It's only going to make the tax code bigger than even as big as what it is right now. But they're certainly working on this, and now the bigger companies involved in housing our crypto for us are helping them along. And I do want to also emphasize here that we're not suggesting it is so much to be used as a currency here in the U.S. Mm-hmm. All around the world, the leaders will make whatever rules they do. Will definitely not exactly match over on ours, but the tax man, as you said, really does love to collect taxes, and will do. They'll get you.
Definitely will. As a portfolio manager for long-term investors, I am always concerned about the volatility of the underlying investment. As we have seen in the past few years, and especially in the past few weeks, cryptocurrency's volatility has been very high. In your expert view, do you see the volatility subsiding as the adoption grows and the speculation reduces from Bitcoin?
Yes, it's a bit of a complicated situation now, and particularly recently. If I remember that Bitcoin is still a baby, new phenomenons do have volatility associated with them. What Gary Gensler called the Wild West. We've heard that discussed in other areas. They were saying that at the beginning of the internet.
Right.
And it just has to mature. You have to get regulations around it. You have to have cycles with it. Interestingly, when gold first began to be traded in a big way in the 1970s, it was pretty much equally as volatile as what Bitcoin has been here. It just as in the beginning situations that will occur. And so if I'm a risk-averse person, or even of average risk, and I'm looking at what's going on now, do I ever want to touch something like a cryptocurrency, or the most major ones meant to be the ones that will survive? They're very volatile. Well, you can have a volatile asset class, but in a portfolio, if it adds to the diversification, which is job one in our business, then it can be a good thing. And if Bitcoin, up until the end of last year, for the previous 5 years, didn't march to any other drummer, it didn't match with anything else. Only this year has it become extremely volatile and more like a high-tech stock, a high-beta tech stock. yes, it's volatile. You would like it to go back and be more of a diversifier than what it's been lately. But I might argue that in the bear market that we're suffering right now, I mean, we're saying to this day, there's no place to hide, and that includes U.S. Treasuries. So I think that the volatility is outsized here because the phenomenon was really, really embraced by millennials and Gen Zs. And probably they own too much of it, more than likely too much of it. And when it starts to cascade down, that's when you get your capitulation, your catharsis, as they say.
Right.
And it should very much settle down. More difficult than in many areas to try to do price discovery and say this is what a Bitcoin actually is worth. But the idea that it's going to still survive and be used around the world argues that yes, this volatility will subside, and the volatility will have been in the books. You will lose those people that were buying, Dogecoin. I mean, there are over 10,000 cryptocurrencies out there. The vast majority of them are not meant to survive. And that's when the real survivors stand up and say, yeah, I'm a legitimate Bitcoin currency or a legitimate Ethereum currency. And that's when, we can act like investors instead of speculators, which is what it was subject to with all the money that was printed and, held by young people who've never seen it.
Earlier, you talked about the various central banks creating their own digital currencies to adapt to this new trend and technology. As an investor, I hear that and question, how will Bitcoin do in that environment where governmental issued digital currencies are favored by regulators? Wouldn't the value and the adoption of Bitcoin go down? Curious to know what thoughts you have on that.
Yes, and I think it could. Some people will argue that it would go down when central bank digital currencies proliferate. That won't change that financial inclusion part that we discussed about the third tier countries, and they're using it very, 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 very much, and probably ever more. And that's why we need to think of it in developed countries, Bitcoin, as a store of value, as a digital gold. We've had some severe volatility here recently. It needs to settle down, much like any bear market does do, and time has to pass as well. And a good bottom has to happen as well. And then we can start to see whether it can act as a diversifier, as a digital gold, alongside gold. And I would also emphasize that in my research, it seems to indicate, though, that it will probably be a decent number of years, 5 years anyway, probably, before you see central bank digital currencies really coming into play and being used. So that's more of a lifespan for Bitcoin to be used.
I know we recently talked about that in another question, but I wanna bring this up again. Due to the limited supply and the scarcity aspect of Bitcoin, it is often compared to gold, as you said. Gold, on the long term, has proven to be a great value storage facility. It has also worked as a hedge against inflation at times. How would you compare Bitcoin versus gold in this current environment where inflation is so high?
I think that's going to be an excellent test for Bitcoin because we're still debating about how long this inflation will last. I just personally, as a child of the before the 1970s, and I lived through that, I'm afeared that it could be we could potentially be reliving the 70s, and if you have inflation, particularly more than other areas around the globe, it definitely could hurt the value of your dollar. And historically, gold worked well as an offset when we were worried about the values of our own currencies in inflationary environments. So it will be a test for Bitcoin as to whether it can also be an offset in your portfolio to those securities that are suffering from inflation and potentially weakening of the dollar, I will say that in the last 5 years or so, whenever the dollar did weaken, and this is particularly thinking about in the times of COVID, it was a very nice debasement hedge. It proved itself to be for certain periods of time already. So it's got that, it's got that much experience under its belt. But I think it's really going to be seen to be a test as to whether investors gravitate back towards that when inflation feeds its way into, almost every risk asset or asset we thought might be safe, is being touched by the 40-year plus, rise in inflation. That two whole generations have never seen anything worse than 2% inflation, and now they're like, you're gonna experience something here for a while, maybe.
No, it definitely is a very unique economic environment that we are seeing here. And you were right. In the past 5 years, as the currency has fluctuated, Bitcoin has moved in as a hedge. But this particular year is kind of unique because of its economic environment, where they are, the currency, the US dollar and Bitcoin and equity markets, they're all moving in tandem, other than gold or some other commodities, right? So,
yes, indeed they are, as we're suffering an inflation shock that we haven't seen for many, many years. But it's only made worse for cryptocurrencies, and Bitcoin in particular, because it's the most popular one. Anyone who owns cryptos more than likely has Bitcoin as a dominant holding. Well, the proliferation of Bitcoin in the portfolios of millennials and Gen Zs is a big problem. And if you remember, I read a really interesting statistic. Remember when we were getting those monies, many of us, it just showing up in our bank account as a stimulus. Well, there was a particular $1,200 stimulus, I think maybe the last one, that showed up, and an uncanny number of new Robinhood accounts, which is I like to say the Charles Schwab for the millennials and the Gen Zs, opening up for exactly $1,200. And this is where I think it could be exacerbated, this downside volatility, is a whole group of young investors that have not experienced anything like this. Maybe they've only been investing for 2 years in their whole lifespan. A decent percentage of people probably have. That's exacerbating the volatility, the downside, I think, for cryptos.
Right, and I think that is what is that could be one of the causes why it's not working the way it should be, because there's a lot of speculation going on in that space. Right?
Yeah,
would you agree?
Really, yes, indeed.
Thank you. In this rapidly shrinking world, thanks to technology, I always worry about cybersecurity and digital threats. With Bitcoin, I feel that security risk and the risk of fraud would only increase, given the fact that there is no central regulatory body to monitor the transactions. But yet, Bitcoin is often touted as a very secure means of transacting and storing money. Can you elaborate for us so that we understand just specifically how the security of this transaction works?
Yes, and I have really a bigger concern personally about it. Cybersecurity is one of my biggest concerns out there, and I like to think that there are at least a decent number of good guys out there helping to secure networks, and it really behooves the big exchanges, for example, to try and make their systems impenetrable. It has been to date impossible for bad actors to hack into the blockchain itself. Anyone who has a wallet has to be very careful in keeping their wallet private, their password private, not falling for these so-called phishing. The bad actors have been around for as long as civilization has been around. So in terms of security, it's way more secure than walking around with a big bag of cash. To do something. I think that the concern is, and you mentioned that there's no one to back this, and that is very, very important. I believe it was in the spring of 2021 when Coinbase, the largest exchange here in the United States, had a decent number of their customers were hacked, and that's because they fell for a phishing exercise. Now, the small print when you sign up with that exchange says, it's up to you to be intelligent about protecting it, and we all should now, particularly more than ever. That goes to our credit cards. That goes, check your credit cards, check your bank, and call right away, and they'll make it right. Coinbase did not have to make it right, but it did do at that time for that group, and can't continue to do so. There is no big brother to go back to say, you have to help me, you have to make me whole. So it's very important to understand that. And I think that this is why you're having a particular shakeout now with those stable coins that we talked about. Mm-hmm. They're supposed to be stable. If they're not, who do I go, as an angry customer to get my money back? The idea of a run on the bank. No bank that we operate with can withstand a run on the bank. So every institution, that's what's so delicate about the financial institution on which we rely. It's the grease, that keeps the machine of global economies going. The very last thing you want is to lose the confidence of using that. And that's why this time period is so important. And anyone who's lost a lot of money in the cryptocurrency arena feel very bad for these people, but it was an eventuality when there are 10,000 and plus of them, and it will bring the much needed regulation. So when we read about regulation, we shouldn't be unhappy about that. That is a good thing, a requirement on the way to credibility.
No, that's a great point. Regulation, as hard as it is, most of the times on the participants, it is for the good. It is designed for the good, and I think it's definitely needed in this space as well. Thank you. In today's world, we all must be conscious of our carbon footprint. Mining of Bitcoin and other currencies come with a big price in terms of the carbon footprint. This worries me from the point of environmental regulation and their effects on the future value of Bitcoin. Can you shed some light on this?
Yes, we're very concerned about that too. Of course, Federated Hermes recently merged with Hermes, which is the leader in environmental, social, and governance investing over in Europe. Very keen on that too. Maybe you've heard the statistic. Bitcoin takes more electricity than the country of Sweden does for a whole year. Whatever you want to do with that statistic. And the rub is on Bitcoin only because it's the biggest one. Right. Yes, the electricity that is required to maintain a secure database takes a lot of electricity, and particularly Bitcoin, and probably not time to discuss this in depth today, that uses a proof of work, which requires ever more difficult, complex equations to be solved, encrypted equations to be solved. That takes up energy, is part of the price that you pay for the security of Bitcoin and the way that it was put together. As much as I think there are good guys out there, I think there are smart guys out there too, and they are working even as we speak and very hard to make this encryption work, to make all this computer work more efficient and to take less energy. That's very important. Today, I believe all of cryptocurrency takes about 0.5% of the entire world's electricity. You may say that's an electricity that could be used for some other place. But as I say, improvements are occurring. Now I think over 50% of the mining that's involved, of the encryption solutions that are involved, are with renewable energy. So we're making good progress there that way. And also we have to remember, anything we do costs energy. And that's a price that we may be willing to pay for the financial inclusion, which is so very important for various areas around the globe to allow this to continue. So I think we're going to continue on making progress, and it is a very real concern indeed.
Linda, thank you so much for taking so much time to sit down with us today. We really appreciate it. Thank you.
Thank you so very much.
So, there you have it. We went into this interview with the zest to learn. And I know I learned a lot today about Bitcoin and cryptocurrencies. I hope you did as well. The biggest thing I learned today was the fact that Bitcoin was created to provide a better financial access to 25% of the world's population who did not have access before. You know that we believe that educating yourself about finances and investments is key to financial success. So let's talk about what we learned today. If you know us, you know that for many years we have been against the idea of investing in Bitcoin or any other cryptocurrency for long-term investment purposes. We've made no secret of the fact that we believe cryptocurrencies are not an appropriate investment for your portfolio. So did this opinion change after today's learning? I guess that's the big question on your mind, right? The simple answer is no. We still believe investing in cryptocurrencies is not suitable at this time for any long-term investor. In fact, I would go so far to say it's dangerous. Here are the reasons why. The biggest argument for Bitcoin has been that it is going to be the next currency. Well, you heard Linda today. She clearly states that in her opinion, Bitcoin is not going to be a currency, at least not in this or any other developed country. And I would have to agree. The central banks of various developed countries are not going to allow an independent, unregulated payment system to take control of their money supply. And even if that wasn't true, can you imagine having a currency that you have to pay capital gains tax on for every transaction you make? Buy a Starbucks latte, pay capital gains tax and sales tax. Imagine what that would do to inflation or your pocket. Or how about the fact that your currency fluctuates in value more than any other asset? Just ask the gentleman who agreed to receive his salary in Bitcoin last year. I am sure he is not happy to take a 60% pay cut this year because of his choice of currency. I can go on, but I think you understand my point. Bitcoin does not yet meet the qualification of being a currency. We are in an economic cycle where if anything claims to be a hedge to inflation, past 12 months is the best test for it to prove itself. We are at 40-year high in inflation. Sadly, Bitcoin has miserably failed this test. Not only has it not been a hedge, it has performed worse than any other asset class year to date. I think the inflation hedge argument is a non-starter. Bitcoin is a store of value. This argument has always puzzled me. Yes, it is a store of value. Honestly, anything that is not consumed can be deemed as a store of value. But is Bitcoin a good store of value? I would argue no, it is not. It has no regulator. It has no transparency of how it creates value. No protection to investor in case of fraud. Your bank account is a store of value, but at least it comes with a guarantee that FDIC will back you if the bank defaults. Your investment account is a store of value, but it also comes with a guarantee that SIPC will back you in case your broker-dealer defaults. The security and lack of a regulator makes it a very poor store of value. So then, what is it? Well, it is a beautiful concept built on a remarkable technology called blockchain. It is a payment system that was created for a noble cause to provide financial access to the unbanked population of the world. A payment system that has sadly become a haven for speculation and trading. This is not suitable for an investor. It is only suitable for a gambler. And you know it better than me. We are investing, not gambling as long-term investors.
Here at Parks Capital, we strongly believe that a successful investor is an educated investor. For this purpose, we've created our own YouTube channel. Education plus investing equals success.